Insurance sounds like an easy topic, right? Pick an amount that survivors might need later and call it a day. But what someone actually needs to think about can depend on individual circumstances. Insurance is one of those things that we hope we never need, but of course we're glad we have it when we need it. To better understand the myths, misconceptions, I'm excited to have a conversation with life insurance professional Paul Shepard from J.L. Thomas & Company in Cleveland, Ohio, right here in our backyard. Balanced Financial Concepts has had a relationship with J.L. Thomas for probably over 25 years at this point, and I'm thrilled to have a few minutes together. Paul, welcome.
Thank you. Thank you for having me.
Yeah, our relationship with J.L. Thomas goes even before you and I, actually, which is nice. I don't know exactly how long, but I guess it's probably been about 25 years.
Sounds about right. Yeah, I mean, I've been here 8, 9 years now, and it's at least a decade or so prior to me.
Yeah, that's a great thing. It's nice to know that we can show up at your door if we need to, right?
Yeah, 100%.
So I'm hoping today, we can run through a few questions that we get pretty often. Better for folks to hear it from you. You see this every day, day in and day out, and help clients figure out, as they start to think about it, if they need to reconsider it, revisit it, how that kind of works. So first question that always comes up is, who needs life insurance?
Yeah, and the short answer is just about everybody. In most scenarios, there could be a reason for it. It's not just for, hey, married with kids and I need to get some insurance to make sure everybody's okay. That's obviously a great reason to have life insurance and a great time to think about getting it if you don't have anything already. But there's a lot of situations, both personally and for business purposes, that people should be considering having life insurance in place. Just about life insurance is used to, at its core, to replace an economic loss, right? So, that could be loss of income, that could be to cover personal debt, that could be to cover business debt, could be estate planning for taxes, for legacy, making sure dependents are okay, of course, final expenses, key people in a business. If you have business owners, that could be a great reason for life insurance too. The list goes on and on. So when you think about all of those reasons to have, where life insurance can help manage that risk that's on the table for those individuals and businesses, it really encompasses a lot of people who may need that.
And if you decide you think you need it, when should somebody consider buying life insurance?
Well, as early as possible is usually the answer, because with life insurance, it's the underwriting process of that is and the pricing is based on age, amount, and health of the individual being insured. So as far as age goes, it's not going to be any cheaper than right now based on age, right? Typically, people don't get healthier as they age. It'd be great if we did, right? But in most cases, that's not the case. So, usually when you're younger, you're usually at your healthiest. Some people turn things around, get better from other situations. That's great. But typically the answer is as soon as possible. You don't want to wait, because we just don't know what the future has in store for any of us, that could change, and have an effect on the underwriting, which in turn could have an effect on pricing.
Yeah, we don't get any younger, right? Nobody's figured that out yet.
No, we'd be very wealthy if we did.
Yeah, I'd like to believe I'm in the best shape of my life, but then I chase my kids around for 5 minutes and prove myself wrong.
then you're feeling the age and what exactly, which I had the same situation, chasing my toddlers around.
That's right. Question we get a lot: I have life insurance through work. Isn't that enough?
It's a nice benefit to have, and oftentimes there's companies that do provide a great benefit for their employees, and there's a couple of different types. When it comes to employer provided life insurance, a lot of times people have a group benefit where they don't pay for it, and that's provided by the company. Not only the death benefit of it, but also the premiums are paid by the company. A lot of times that can be smaller amounts, but there are some companies that do provide a large amount of that. And then there's also life insurance that maybe the benefits package of a company, they allow you to pay premiums on additional life insurance on yourself. The biggest thing to be aware of when it comes to that is that's nice to have, but you don't really have control over it in most situations. Sometimes you do, but especially the group, but oftentimes the one you even pay for through the company, you might not have access to that or be able to keep that policy if you're no longer working for that employer, right? And we just don't know what could happen with a company and with an employer. Your employment isn't guaranteed with a company, and that could be your decision or their decision, or economic factors that cause you to no longer be there. But you may not be able to keep that policy. It might not be portable when you're no longer there. So, and when it comes to the portability, if you can't take it with you, and let's say it's several years down the road, who's to say you're still qualify for great rates on insurance at that point? We just don't know. So having an individual policy where you do have control, where it doesn't matter where you're working, is always recommended to have in addition to those benefits.
Yeah, I see. I would agree with that. I think, group insurance through work is nice to have, right? But we also talk about the taxability of benefits, right? Especially if the company's paying for it. And that could be a big issue if it's based on 1 times, 2 times salary, and you have a high income. That could be a lot of money that's taxable to beneficiaries later on. So it's nice to have, always nice in my mind to keep control, right? Regardless of what life throws at you.
Correct.
So how does somebody determine how much life insurance they need, and how do you get to that figure?
So here's the best answer to any question is it depends, right? So it really does depend on everybody's individual situation. There's no hard and fast rule as to how much somebody should have. You might hear some generic rules out there that say, 6 to 10 times an income or something like that. It really just depends on, what kind of risk are you facing? Somebody might have high income but have high debt, and now you've got not only debt to cover but income to replace a lot of it. Somebody might have high income, low debt. So there's going to be a different there. You could have low income, high debt, and low income, low debt. I mean, it just kind of depends, on that age of dependence that people depend on you economically. Business wise, just kind of depends on valuations, key people, things of that nature. So it really does depend on your own individual situation. And that's where it's important to consult, your financial advisor to discuss, hey, here's my situation. Here's what I have or don't have life insurance wise already. I would like to make sure, my spouse, my kids, whomever it might be, is covered for however many years. Should I prematurely die? So it really does depend. And that's really where the value of a financial advisor comes in, and to help sort that out with the client and say, okay, well, here's what we need to be considering as part of your risk management portfolio.
Yeah, I think the 3 things that we tie into the formula, obviously paying off debts, for younger families, the cost of college and trying to cover it if you can. Yep. And then, of course, at least a couple years worth of income for survivors. At least it bridges that, few years after a loss. And, a wise man once told me you can never have too much life insurance, right?
Yeah.
But it gets to the point where you're paying for too much also, right?
Correct. Yeah. And it comes to, what's your budget, tolerance and ability, to pay for that. Obviously, people say you don't want to be house poor. Well, you don't want to be insurance poor either, right? You want to make sure that, you're in financially in a good place, but also able to take however much risk you can off the table should something happen.
Yeah. And speaking of, paying for too much insurance, what are the biggest mistakes people make when buying life insurance?
Oh, well, there's a long list that we could go through. Um, I think in my mind, one of the biggest mistakes when people are looking for insurance is trying to do it on their own, first and foremost. Just going online and, sure, you can buy life insurance online. This also goes into one of the biggest misconceptions about purchasing life insurance too. I think people think that they can get through it easier, or maybe they don't have to deal with an agent, or they don't have to pay a commission to somebody for getting life insurance, but by going online, when in fact there's an agent on the other side of that computer, just like you and me, that gets paid, but you're not getting the follow-up, you're not getting the consultation, you're not getting a lot of things that come along with having a local agent and advisor helping you out. So I think that's a big mistake that people make when looking for insurance. Um, you know, as far as the amount goes, I think a lot of people do end up getting less than what they probably really need. I think we're a price-driven consumer, society, and that's from a lot of factors. And I think that a lot of people don't put enough emphasis on the risk management part of their financial planning. And and so with that said, they say, okay, I only want to pay X amount per month or per year, and end up underinsuring themselves.
Yeah, that's the biggest thing. We get people coming in throwing big numbers at us about how much they need. And the first question we ask is why, right? Why did you come up with that number? And a lot of it is just educating people on what makes sense in their situation, right? And I think most people understand how life insurance works and of course what purpose it serves. But what are some common misconceptions about life insurance?
Yeah, I think we've touched upon a couple of them, right? With group insurance, a big misconception is I'm covered at work. I'm good. So we've touched upon that. I think a big misconception is that it's too expensive. When in fact, there are a lot of products, and the pricing of products these days can make it quite affordable to get some coverage. And of course, pricing varies, whether it's term life insurance versus permanent life insurance versus cash value permanent life insurance, but just at the basis of getting covered, it's very accessible to most people as far as price. And again, that's where coming in to talk to somebody like yourself or their financial planner is crucial to kind of work through that, and how much that could cost. Am I too old for getting a life insurance? There are certain cutoffs, right? It's never too late situation, but I come across a lot of situations where people say maybe they're in their 50s, 60s, what have you, and they say, oh, I can't get, I'm too old to get life insurance. Well, we do policies for people in their 60s and 70s every day, right? So the too late or too old misconception is a common one out there. Let's see, I think, yeah, another one is, do I have to take an exam, right? There's been a lot of advancements in underwriting, in the process and procedures of getting people covered, where there's a lot of information and data out there, and carriers now are willing to and are able to underwrite people without having to do an exam in a lot of situations. So, so it's not always that somebody has to do a life insurance exam to be able to qualify.
Yeah, and you make good points. I mean, buying life insurance means another bill, right? And we all have bills to pay, but what becomes important, is it worth it, right? And then we do hear from a lot of people, I don't want to go through an exam. I don't want the free physical, like we tell people, go get the free physical, right? And a lot of people just don't want to do that. Maybe they have pre-existing conditions, maybe there's something they're worried about. So if somebody's worried they might not qualify, what should they be doing? What should they be thinking about? Is there a better way to approach this?
Yeah, and that's talking to a good agent is worth its weight in gold when it comes to that, because and working with somebody, in my opinion, that's independent, that has access to a lot of life insurance carriers, and maybe just not just one or two, to then be able to kind of have access to the universe of different underwriters, because every carrier out there may have different competitive niches that they do well with their underwriting. And if you're only looking at one company, you might be selling yourself a little short. Whereas another company might say, "Hey, that's a risk that we're more willing to take on." So I think a big part of the process of vetting out companies and looking at the best options for clients is talking with an agent through your medical history, family history, things of that nature, and being perfectly honest about it, and allowing that agent to properly pre-screen somebody to go find the right one or two or three companies that might be the best option for them.
Yeah, and to your point earlier, you can by all means go and if you have enough time on your hands, research all this and do it yourself, right? Take on that burden of finding a company and vetting them out yourself. But as you know, for all of our clients, we try to ask a lot of questions up front so
Yep.
that there's no surprises. We don't want to find out later on that there might have been an issue down the line, or you're getting interrogated about something that hadn't come up before. So we
Correct.
do try hard to pre-screen everybody, at least on the front end, and that's what allows us to be able to shop, right? So just like doing your own taxes, nothing wrong with it if you don't need somebody, but sometimes you need that person that knows what they're looking for, find things you won't be able to find, and ask the questions you wouldn't know to ask.
Correct. And I see it all the time. There's situations where a client might be declined over with X carrier and another carrier is willing to offer standard. And so working through that process to find those better opportunities and avoid declines potentially out there is well worth taking the extra time to go through that process.
Absolutely. Now, for the most part, we know that term insurance is the cheapest way to go, right? Pay a set premium for a set amount of time, and then hopefully by the end of that, your debts are lowered, don't need insurance anymore. But we've been seeing lately that sometimes it makes sense for clients to keep and continue in, life insurance coverage. When should someone consider converting a term policy to a permanent one? And what does that mean?
Sure. No, great question. And if I could just step back just for a second to make sure that we all know what that even means, right? So most term policies out there that I know of will allow you to take a portion or all of that death benefit of that term policy, and you can convert it to a permanent option that they offer. Each carrier is different in what permanent options that they offer, and they can change over time. But usually they have some kind of product that you can convert it to. And what the conversion essentially means is that you could switch over to that permanent policy without having to get any kind of medical underwriting. So let's say you get offered standard or preferred for your original term policy, you're going to get that permanent policy that you convert to at the standard or preferred rates that you qualified for at the beginning of the process for the term. There's no additional underwriting needed. The pricing is just going to be based on the age at which you convert, right? So the longer that you wait to convert to that permanent product, the more expensive it's going to get, because the cost of the insurance goes up as you get older. And so what's the right time for that? I mean, it depends, right? There's that answer again. So it depends on what the situation was. Some people might come into getting life insurance wanting permanent insurance from the get-go, right? But maybe the budget didn't allow, so they got term insurance, and perhaps some things changed, and now they're okay and able to to move forward in their budget to get that permanent insurance. So I'd say as early as possible there. We often see times where maybe somebody has had some health challenges, and with those health challenges, obviously the ability to get underwritten for additional life insurance or new life insurance somewhere else might be challenging. And so that might be the time to think, hey, okay, I can see I'm going to have some challenges when it comes to underwriting going forward. Maybe I convert my term policy now while I'm as young as possible and do it then. Most carriers will allow you to convert somewhere around to up to age 65 or 70, or there might be restrictions based on the term length. So if it's a 20-year term, maybe they allow you to convert in the first 15 years. So again, it's important to go over the information and the details with your advisor to make sure you know exactly what your options are, and you don't miss a window, because a lot of times carriers aren't sending letters saying, hey, Mr. and Mrs. Client, your conversion window is ending. Some of them do, but not all of them do. So
Yeah, and speaking of not getting letters, you may get a letter in the last year saying your premiums are going up by triple because the level premium term has ended. So we get a lot of questions about that because clients don't remember what the term means, right? They're going to pay these premiums until the policy expires. Well, the policy is not going to expire, just the level premium, the set amount you're going to pay every month or every year changes, and then it goes up by some astronomical amount. And that's what usually triggers the conversation. Oh, what should I do with this? And that's when we start to review.
correct.
Converting to a permanent policy, whether that's, in insurance companies, there's no such thing as permanent, which is an infinite age, right? They'll pick some age that you possibly couldn't live to, 110,
Right.
121, 130. And that's how they figure out their costs. But you certainly don't want to be covered to 150 and pay for that time frame, because nobody's living that long either.
Right, exactly.
It's important to review these things from time to time, right?
Absolutely.
And that kind of leads to, yeah, go ahead.
I was just saying, periodic reviews of life insurance, even if it's just term, right, which is very simple, right? It's guaranteed premium, guaranteed death benefit for a set amount of time that you've chosen. It makes sense to do periodic reviews with your advisor on those anyway, so we can talk about convertibility. What's changed in your life? Maybe you have a need for more coverage. Maybe you don't, and you should do a face reduction because you're paying for too much at that time. There's many reasons as to why you should continue to have reviews about life insurance.
For younger families, we know that life insurance is a big topic because you have kids now, right? Or as parents, you want to make sure your family's taken care of. And so, not including coverage through work, some people already have individual life insurance, either because they bought it for themselves at some point, or maybe their parents bought it for them when they were younger. So if for somebody who has insurance already, how should someone review what they already have, and how often should they be doing it?
Yeah, I would say, at minimum every 2 to 3 years, to review it, if it's a term policy or, simple whole life. If it's cash value policies, maybe it's an index UL, variable, whatever it might be, that's a bit more complicated and complex and has a cash value component of growth there. I would be having annual reviews about it just to make sure everything's on track and doing what it's supposed to do.
Yeah, and just like we do with anybody's financial plan, right? Just because it made sense at one point doesn't mean it will always make sense. And so it's good to know what you have. Some things may not be the best thing long term, may have covered what you needed at the time, but maybe you had enough when you had one kid. Now you have 2 or 3, or, health changes in the future, or, your family history changes along the way, and you need to make sure you cover for those. There's always the what ifs, and that's really what you're thinking of. You can't plan for everything, but you try and cover at least the big ones. Last but not least, life insurance on kids. Why or why not?
Yeah, I'm a big proponent of it. I've got 2 toddlers of my own, and they have we have policies on them. I would say there's various reasons, certainly, and this is the least, the one that's least favorable to talk about is should something happen to them and they, die as children, there's a cost, obviously, economically to the parents to take care of that. So having some coverage for the parents for that, it is a reason. Now, for better reasons, in my mind, I think it's a great idea to think about something like a whole life policy for children, basically just to ensure their insurability. We don't know what the future holds for them. They might be healthy babies or toddlers or 5, 6, 7-year-olds. Perhaps they get diagnosed with something, in their childhood or early adulthood or whatever that we're not anticipating. And what's their ability then to be able to get life insurance for themselves and for their future families, while having a policy that's very, very affordable, because of their early age, is a great idea to get in place to ensure their insurability down the line. And then there's also features that you can get on those types of policies that allow them to increase the amount of insurance. As they get older, there's usually 7 or 8 windows in their adult lives, between ages 20 and 40, typically, where they can go and get additional insurance without having to do medical underwriting. So, I think it's certainly something important to consider, for those that have kids that want to make sure that they have the ability to protect their families down the road. And then lastly, there's also the ability of, hey, I want to do something nice for my children, and cash value life insurance can help have kind of like a little bit of a savings component for them to use down the road when they become adults. So there's various reasons why to do it, and that I think is very important to consider when you have kids.
Yeah, and 2 of the 3 reasons obviously are things we don't want to have to think about.
Correct.
But we do want to, and we don't necessarily want to buy life insurance out of fear that something might happen, but we want to think objectively about what could come up, right? And we've had a few clients that have had older life insurance policies that their parents bought as kids. They've built up cash value. And at that point, knock on wood, they're still healthy. So they can afford to buy more insurance. So they're either, turning that cash value into some sort of bigger policy, drawing the cash value out to pay off debt, student loans, what have you. It just gives you options, right, for your kids to have later on. Healthy, not healthy, it just gives you options. And a lot of it does come down to affordability, right? Don't go out of your way to try and buy policies for your kids if you're trying to pay other bills. But that's where an advisor can help.
Exactly.
Yeah.
Exactly. Yep.
As usual, a quick conversation, but a great overview of something we all need to think about, at least from time to time. Having insurance doesn't mean it's the right amount forever. The right type of insurance, needs may change. What your survivors may decide they need could change from time to time. Paul, anything else you'd like folks to know as they think about or revisit life insurance needs?
Yeah, no, I mean, I think we've covered a good amount here, but I'd say, make sure you're talking to a professional that is there to support you and continue to provide service on, existing policies you have and potential future policies. It's absolutely crucial to have the right support and help in place for that. And, that's what I'd leave you with.
Yeah, Paul, thanks so much for your time today. As a financial advisor, we get into the weeds for our clients, right? And that's what we want people to understand. If you're going to work with somebody that's going to fight up front, that's going to give you the options, find the right companies to work with, the right value for what you're paying for it. And like we talked about conversion, right? What are appropriate options? Some companies may be cheaper, but they also don't have very good options for later. So you want to make sure you're weighing all that out. And for us, many times helping our clients, no matter what, means that we're thinking beyond you and making sure your family is protected after a loss. So now, hopefully, you've gotten a brief look behind the scenes as to how we explore life insurance conversations with clients. Life insurance also relates to estate and legacy planning, and what you might need to leave behind or want to leave behind for your family. So make sure you talk to your financial advisor and have an open conversation about that, because this can be something important. If it's not important now, it might be later. After all, we don't plan to fail, we fail to plan. Thanks for joining us.